start with the fact that we saw a new 2010 high for the NSE 20, bringing markets to a 20-month high. So clearly a lot of positive sentiment in Kenya.
Yes, I think we remain positive, relatively disconnected, and we've got our own momentum at the moment. Obviously, I think the risks remain domestic and political, but I think otherwise it looks pretty well underpinned here, with the latest bout of strength coming out of the big bank stocks like Equity Bank, Co-op, and the like. So it looks pretty good to me. The pullbacks, I think, will remain shallow as long as the world doesn't get much more turbulent than it is now, which is pretty turbulent.
Well, you mentioned Equity Bank, and we saw Equity Bank hitting a 12-month high in terms of its share price at 23 shillings. A lot of news that has come through for Equity. We know that it signed that deal with China's Development Bank. Apart from that, that M-KESHA strategy that has been implemented by Safaricom and Equity. So a lot of positive news filtering through this bank, and of course this is why we're seeing the share price rising extensively as well.
Absolutely. I think, investors are having to chase Equity Bank shares. They're having to put back a strong growth premium into the stock, and they are seeking to do that across the board. I think we traded as high as 24 this morning, and I think we're seeing Dr. Mwangi and his organization seriously playing strong offense. And I think that China Development Bank tie-up confirms that he can draw on countries way beyond where other people can draw on. And I think the M-KESHA transaction, partnership that is done with Safaricom is a game changer, and that investors are yet to truly comprehend what type of game-changing event that is. I'm extremely bullish for both Safaricom and Equity Bank on that trade, which is essentially bringing, I would call, an ultra-high frequency, low denomination lending model, giving a hand, not a handout, to the bottom of the pyramid. And I think the ripple effects will be far beyond Kenya, into Africa and all over the globe.
Clearly quite a lot of positivity for Equity Bank, but looking at Safaricom, because we haven't really seen much movement on its share price, a lot of volumes coming through though. We are expecting those results out on Wednesday, and investors are feeling quite hopeful that we'll be seeing a very good set of results.
Absolutely. I think we're about 10% off the 12-month high, which was 610. The pitch got queered a little bit when they got into that spat with the regulator, the CCK. I think that took some of the froth off the price, and investors have preferred to sit back and now wait for these results, which come out on Wednesday. I'm fully confident that we're going to get some very strong results. It's all about data, and I think this M-KESHA transaction confirms that they're able to pull rabbits out of the hat, and I think this is that will be a rabbit out of the hat going forward.
Clearly a lot that we have to take into consideration on the regulatory side of things. But how have you been playing Safaricom prior to its earnings? Have you been holding steady?
Yes, I have. I'm very confident. I think the penny will drop on the full year results. There's been a lot of talk, but there hasn't been much hard and fast numbers. And I think these results will be the first confirmation of exactly what's been going on in that business as it morphs out of its voice business into a much more dominant data banking type player. So I'm sitting tight. I'm looking for a strong number come Wednesday. Obviously, it's difficult to judge because there's so many foreign investors in this stock, and if we get a big bout of turbulence overseas, we could see some profit taking. But on balance, it looks very well priced to me.
Looking at the economy, though, we know that private sector credit extension is expected to grow, and this is at least what we've been hearing from the central bank governor. Lending rates remaining unchanged at 6.75%, pretty much what most of the investor community had expected. But the big question is, even though we've been seeing banks coming in and dropping the lending rates, have you been seeing the money and the credit being filtering through to the people on the ground?
No, I mean, to date, we have seen very little movement on rates for retail, the likes of myself and other people. It's been very, very recalcitrant. The central bank keeps on trying to coax and encourage the banks to do this. It is inevitable, it will tip, but it has not tipped yet. And I think the next leg up in the stock market is driven by the credit spigots being turned on for retail. So I'm confident it's inevitable. I think, you know, you've got such T-bill rates are now below 4%. Lending rates are at 15. This is the widest I've ever seen it anywhere except in, you know, very, very strange countries. So I think they've got to move. It is inevitable. It will happen. And that will be the next leg higher in terms of the stock exchange.
Well, just looking at the banking stocks, we've seen incredible moves coming through for Standard Chartered, Barclays, Cooperative Bank. There have been a few laggards. Do you see this as an opportunity to head into the likes of KCB, for example?
That's an interesting question. KCB is the laggard out of the top 5. They only expanded their first quarter 10% versus a run rate above 30 for the outperformers. I would still wait. I think on the chart, 24 has been resistance for 2 years. I'd probably buy KCB when it broke through 24 and otherwise sit on the sidelines. I think they have tremendous real estate, but I can't see the inflection point in the earnings stream as yet. And I'm looking for that on the horizon.
Well, we are, of course, hoping to see good earnings coming through from some of the agricultural stocks purely because the drought is now over in Kenya. Looking at Rio Vipingo, because they are expecting earnings to plunge by 25% because of the drought, but they are expecting things to get better from here onwards. When you look at the agricultural sector, PE is looking relatively good and looking cheap as well, but a risky sector to invest in.
I'm not so sure how risky it is. I mean, you know, something like Rio Vipingo trades on a PE of 7. Admittedly, they didn't get the big price hike that the T-boys got with the drought and were able to have a double win on that side, on the T side. But I think, you know, the PE of 7 with a value in real estate many times higher than the actual share price is trading at, you know, you can't go much lower in these share prices. The key missing ingredient amongst these companies is an inability of management to extract value from what are significantly and egregiously low prices. That's my issue with this sector. You know, it's very sleepy, it's very slow in terms of the management. These guys have been in the seats for 20, 30 years, and I feel that they need a great deal of innovation and some shaking up because these values are plain out of sync with anything I'm aware of anywhere else.